Hey guys, good afternoon and welcome to MF Corner. I'm Pavitra, with me is Ekta, and today we've decided to plan an entire show where we're going to focus on all of the queries that we've got from our viewers. And you know, this time it's very interesting because I was going through the entire lot and there are so many on the mid-cap space, on the small-cap space, on the micro-caps as well. And Ekta, it's completely understandable, right, considering what we've seen go down in the markets.
Hi Pavitra. Yes, absolutely. There is so much interest in the broader market. So let's kick off the show this afternoon. We have with us Gaurav Gupta, who is the director at G-Cube Investments, to answer all of your mutual fund queries. Let's get to the first question. We have Abhinav Kapoor, who writes to us from New Delhi. He asks if the rally in the small cap funds will continue and if he can invest some money in the space. He asks which funds would probably be suitable for him. Remember, the small caps have given returns of over 30% on a year-to-date basis. Gaurav, is it good for more?
Hi, Pavitra. Hi, Ekta. Yeah, coming to, the small cap space, as you said rightly, that the one-year return is, close to 35%. But there are 3-4 parameters still that, make valuations attractive in the small cap space. If we look at the 3-year, 5-year, 7-year, 10-year rolling return, which is the weighted average, return of the portfolio. So the small cap funds have still delivered only 15% on a weighted average basis. Secondly, also, we are comparing the 2008 and 2018 highs that were witnessed in the small cap space, where the P's had gone to 40 plus. Over here, it's still below that, particular level. Also, if we are looking at the small cap index, we see that, about 40% is from manufacturing and capex, which are, the two thrust areas currently in the space. So I feel there is still a lot of, valuation gap, even though the earnings are coming good. So if you ask me on the small cap space, my top picks would be Nippon small cap and HDFC small cap. It would be advisable for investors to invest through the SIP route.
All right, investing through the SIP route is... All right, that is helpful, investing through the SIP route at a time like this when the index has already rallied so much, perhaps makes sense. Let's also get to our next query then. We have Sharon Collins, who writes in to us, and she has, she's actually writing from Mumbai, and she's been investing 10,000 rupees in the Axis Blue Chip Mutual Fund and also 5,000 in the Mirai Asset Large Cap Fund. Now, she says she wants to invest another 5,000 rupees monthly and ask for a suitable fund. She further asks if she should make any changes to her current holdings as well. Gaurav, here is someone who has, two holdings, both in blue chip names, right? You have the Axis Blue Chip Fund as well as the large cap. Normally, we would say that it's better to look at one fund for large caps, one for maybe mid and small. How would you look at this? Would you suggest getting out of one of these and, changing the portfolio a little bit on that front?
Yeah, I would definitely suggest Pavitra to rejig the portfolio. It's better that she maybe, stops the SIP in the Axis Blue Chip Fund, because actually the Axis Blue Chip Fund, the last 1 year, 3 years has been considerably bad for the fund. It's been, ranked around 25, 26, that is coming in the 4th quartile in the large cap category. And also, due to the fact that there are Mr. Jinesh Gopani, who was, the chief investment officer there. He has also resigned from the company last month. So I think there are a lot of, changes that are happening, which has also, maybe impacted the, fund performance. So in that sense, she can continue with the Mirai large cap and the 10,000 rupees plus she has some additional money. She can look at maybe one mid cap and one small cap fund in the portfolio. I would suggest on the mid cap side, she could maybe consider the HDFC mid cap opportunities, which is being managed by Mr. Chirag Sitharwar and has given around a 20% return since the last 10 years. Even the SIP returns have been consistent. Even though it's the largest mid-cap fund with a AUM of close to 40,000 crores, it's still doing exceedingly well. On the small cap space, they can look at either SBI small cap or a Tata small cap. These two funds have done well, even though they've restricted inflows into lump sum investments, but they are still accepting SIP, investments into the funds.
Okay, all right. So that's on Sharon Collins' query. But let's get to another one. We have Rahul Kanam, who writes to us from Pune. He says several fund houses have launched new IT funds. And if it makes sense to look at this space now, he asks which fund should he probably invest in. Well, Gaurav, on this front, what would you recommend? Because there has been some amount of pullback which we've seen in IT stocks.
Yeah, IT as a sector, you'd be aware that there was a big run up during the COVID time, and then there was a correction followed by a correction. So, from a valuation standpoint, I would say right now the valuations are reasonable at this point of time. They are not overvalued, but if you're comparing it to the Nifty, it's trading almost at a 25 to 30% premium to the Nifty valuation. And also, last week, I think TCS and Infosys, the revenue guidance came, below expected. I think it was around 1% compared to 3.5% what was there earlier. But though IT as a sector would, continue to contribute to the India growth story, it would account for about 10% of India's GDP by 2025, which is currently about 7.7 now. If I would ask him to actually review his overall investment portfolio, because I'm not sure what other funds he's holding, and if he's still very keen on increasing his exposure to IT, he can maybe look at the SBI Technology Opportunities Fund.
Okay, that is on the IT funds. I get the curiosity, in just the past couple of weeks, there have been, I think, 2 or 3 new fund offers, which have all been on the Nifty IT fund. And I think most of them are index funds as well. But moving on, our next query comes in from Shivali Kadam, who writes in from Chandigarh. She's 25 years old and says that she wants to begin her investment journey. She wants to invest around 10,000 rupees per month with a very long-term view and asks which funds she can look at now. Gaurav, this is interesting because, anyone who's getting into the markets for the first time is looking at a very long kind of horizon. It always gives you a little bit more flexibility in terms of what you can really advise, right? So if you have to construct a portfolio for a 25-year-old who's looking at it for, very long term, what are the 4 or 5 schemes that you would recommend?
Yeah, I would definitely then, consider more of mid and small cap. So, coming to the 4 or 5 schemes for Pavitra, I would say my top pick fund would be, the Pavitra Parekh Flexi Cap Fund, because, that is having large cap, mid cap, small cap, it's having a little bit overseas exposure as well. It's given a return of about 18%. The fund has been around for the last 10 years, and the fund management and everybody is all the same. And they are having only one fund in their stable compared to, a lot of other mutual funds, which are having, 3, 4 other different types of, funds. Second fund I would recommend would be a multi-cap fund, like maybe an HDFC multi-cap. Multi-cap, as the name says, the mandate is to have 25 in large, mid, and small cap, and the balance 25 can be, shuffled around by the fund manager. So the HDFC multi-cap is only about 2.5 years old, though it's been managed by Mr. Gopal Agarwal, who was earlier with, Mirai and SBI, and the fund has done, very well consistently. And on the, maybe the third fund would be like on the mid-cap space. So on the mid-cap space, maybe we can look at something like a Kotak Emerging Equity Fund. So that is also been around for a long time and given about 17-18 cash. It's been managed by Mr. Pankaj Tibrewal, who's been around for a very long time. And the fourth fund in the small cap space could be like a Nippon small cap fund. So the Nippon small cap is the largest, again, small cap fund with about a 30,000 crore plus corpus, and Mr. Samir Raj has been managing it since the last 6-7 years, and that is, if we are looking at the return, it's one of the highest in the category across all funds, giving almost a CAGR of close to 30% in the last 10 years.
Okay, all right. Well, Gaurav, let's get to another query, this time from a lady as well. We have Shweta Jain, who writes to us from Indore. She says her investments of around 5,000 each in the Sundaram Small Cap Fund and the PGIM India Small Cap Funds have not done as well as expected. She asks if she should shift or stay invested in these funds. She's asking where else can she deploy her money when it comes to the small cap space.
Yeah, so coming to the PGM first, like again, PGM actually they had heavy cash exposure in the fund in Feb-March period, and what happened in March onwards to September, there was a huge rally, we know, and in the small cap funds delivered around, close to around 25-30% absolute return, and the fund was having maybe close to about 15-20% cash holding. So that's one reason why the fund underperformed, and 1-2 sector calls they took didn't also play out. Secondly, the Sundaram Small Cap Fund has been actually a consistent laggard and has underperformed even the benchmark small cap index. On a 1 year, 3 year, 5 year time frame, it has always been even below the benchmark. So these two funds, unfortunately, have not done, well. So I would suggest maybe they can look at maybe stopping the SIP in, both the funds and consider, another small cap fund. If she's an aggressive investor, she can, even consider like a quant small cap fund. Quant actually has been one of the most fastest growing, fund houses as far as equity fund management is concerned. So, in fact, the small cap fund, if I'm not mistaken, has a, it was a 100 crore fund about three years back, and the fund AUM has grown to close to 9,000 crores now, and they have been, delivering good return. But obviously, there is a high portfolio turnover ratio over there. So the fund manager usually, churns the stocks quite a bit. If they're okay with if she's okay with a little bit aggressive fund, she can look at a quant small cap fund, or she can even consider a Kotak small cap fund, which has done, consistently well.
Okay, that is very helpful, considering that the funds that she is holding have not done so well. These are some other options that you can look at. So you can get out of what you are holding and reroute your money into these funds. Gaurav, it's been very interesting to get your take on all of these queries that have come in, and we have lots more, but we have to take a quick 2-minute break before that. So we're just going to slip into a break. We'll come back and finish up with all of the queries that have come through.
15 years, and his goal is to accumulate a decent corpus for his retirement. So, Gaurav, over to you. Do you think that this is a good bunch of funds to hold on to for the next 15 years, would generate enough income for him to retire comfortably?
His fund selection definitely is good, except, barring maybe one or two changes that I would, recommend for him. As far as his retirement corpus is concerned, I would say that, if you're looking at about 15 years, at about a 15% compounding, it'll work out to about 3 crore rupees. And at 12%, it will work out to about 2.3 crore rupees. So I would suggest that also, he can save more money. The mutual funds have a SIPs, step up or top up facility where you can increase the amount by maybe 5 to 10% yearly. So if, he opts for a SIP top up facility, his corpus can grow as high as 5 crores, maybe at 15%, and close to about 4 crores at, 12% with the step-up facility at 10%. Coming to his, fund selection, I saw he's having one Mirai Asset Tax Saver Fund. So if he's, looking at a tax saving perspective under Section 80C, then maybe it makes sense investing in a tax saver fund. Otherwise, I would suggest he goes for either a multi-cap or a diversified equity fund like a SBI Contra Fund instead of the, tax saver fund, because the tax saver fund has a 3-year lock-in for every investment you do. So if he's not using it, for a tax saving perspective, so I don't think it would make sense to, specially select that tax saving, mutual fund. And coming to the small cap funds, instead of Canada, I would suggest he can maybe look at a Nippon small cap fund.
Okay, got that. Gaurav, it's been lovely having you on the show. So thank you for taking out the time and answering all of these individual queries that have come in. We're unfortunately completely out of time. We've lost more queries, but we'll probably have you on another time to get to those as well. With that, it is a wrap on this edition of MF Corner. Thanks a lot for tuning in. If you have any queries, you can email us and we will keep taking these up with our experts. Stay tuned. Closing bell comes up next for what promises to be an eventful last hour of trade.